Good morning and welcome to the Trade Talk podcast. Globally, the flows are completely muted. US markets close with minor gains. However, if we go through with the macro factors, then they are little bit supporting to the emerging markets. The dollar index closed below the mark of 102 and the 10-year bond yield fell to the levels of 3.45. Indian currency, which was around 81.3039, is currently at 81.72. I mean to say it fell to the levels of 81.72 on Tuesday, which has actually created some pressure on the Indian markets. Now if we go through with our markets, then there we saw sideways activity in the morning. Even though there was higher opening around 18,200, we saw the markets were cracking during the day and it fell finally to the levels of 18,100. So the broader pattern of the market is clearly indicating us that we are going to see furthermore range bound activity in the near term. However, now the supports are shifting from 17,900 to 18,000 and resistance, which was around 18,300, is now moved to the levels of 18,200. So for the day, on the day of weekly expiry, we need to see that whether the market takes support around 18,000, 18,050 or not. While looking at the PCR ratio, it is at 0.66 for the same expiry, for the monthly expiry, which is an indication of the oversold activity in the market. And if we see the markets are falling to the levels of 18,000 or 18,050, then there we can expect furthermore oversold sort of activity. So from there again we can expect some rebound based on the option statistics and based on the overall this technical setup. We are of the view that we should be buyer in the out of money call option if we see the market is dropping to the levels of 18,000. On the higher side, as we mentioned, 18,200 going to act as resistance. For the bank nifty, again 43,000 acted as major resistance and 42,500 is the support level. Below that again the chances of hitting 42,000 would turn bright. However, while looking at the oversold activity of the market, we are of the view that we should be cautious while creating or adding short positions at lower levels. We need to focus again on auto companies, a few metal companies from lower levels, and also we need to focus on IT companies because there we are seeing some buying attraction. For the BFSI, we need to be little bit selective as most of these stocks are finding resistance at higher levels. They are finding difficulties to sustain at higher levels. So that means we can expect some furthermore weakness in the near term for the BFSI. That's all from my side for the day. With this, I'm ending today's morning podcast. Thank you and have a great day to all of you.